Like that idea. Thank you very much. Time now for Trading Nation. As shares of Union Pacific sink after earnings, let's look at what the rails might be telling us about the American economy. Your team today, David Seaburg with Cowen Co, Boris Schlossberg with BK Asset Management. All right, David, some people like to use this transport theory, basically that if the transports do well, the market will do well and vice versa. A, do you believe that? B, if so, is UNP telling a bigger story?
UNP is not telling a different story. I mean, you could throw that out the window. I mean, in general, I mean, what we found here at Cowen is the truckers are much better telling the economy. The transport, I mean, the rails in general. I mean, you're looking at a big agriculture, a big, sort of oil sort of, weight there. I mean, they're really dependent on that. In general, look at the truckers. The truckers will tell you what's going on in the economy, and they've been a mixed bag. If you look at the 52-week charts on a lot of these guys, I mean, again, across the board, some are up 50%, some are down 50%. So just like the economy, the truckers are signaling the economy is a mixed bag. Stocks are up for a lot of different reasons, a lot of different sectors up for different reasons. I can tell you mostly because of financial engineering and because of Fed backstop. So I'd say to you, be very careful and tread lightly here, Brian. You know I've been a massive bull over the past 5 years. I am still relatively cautious, again, on the overall market, and I'm going to keep that out there. I don't believe that the transports right now, or the rails in particular, are telling us something any different than they did a year and a half or 2 years ago. Okay. Boris Schlossberg, do you agree with David's vision?
Well, is the economy coming off the rails? Sorry for the bad pun, but could possibly be. One of the interesting things when you look at it from a global macro perspective is that we are starting to see some serious cracks in global growth. You look at China, we had a miss in industrial production this week. You look at Australia yesterday, a massive miss in employment, equivalent to losing 500,000 jobs on the U.S. equivalent basis. The two central bank governors this week, Mario Draghi and Governor Polis from Canada, both came out pretty downcast in terms of forecasting their growth. As a matter of fact, Governor Polis from Canada said that trade is in a structural slowdown, not a cyclical one. So there are clearly some warning signs out there that I think something is slowing down. Whether it's just simply a pause that refreshes or really we're going to start to fall off a cliff, I think is too early to tell. I think in some ways it could just simply be a freeze because of the political situation. Maybe the investors and the market and generally business sentiment is just waiting to see the full resolution of this, and perhaps we get demand coming back. But definitely a yellow warning sign going out right now.
All right, Boris Schlossberg, David Seaburg, watching for warning signs from the rails. Guys, we do appreciate that. Thank you very much. For more Trading Nation, a.k.a. the little segment that could, go to tradingnation.cnbc.com.
Fluctuating commodity prices can impact more than just energy and material stocks. For example, lower oil prices might bring down transportation and packaging costs for many products and companies outside the energy complex. So when you invest in a particular sector or industry, keep a close eye on commodity prices and what they might mean for your investments.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the eye right here to watch the latest from CNBC. Thanks for watching.